All right, what's up? Tim Sykes here. I hope you're having a good weekend. Wanted to go over a bunch of plays, so many opportunities every single day. Leave a comment underneath this video if you understand that. Whether you're learning, whether you're earning, whether you're learning and earning, every single day, there's some truly great plays. And I want you to really just to capitalize. I have a crazy schedule. I wish that, the market weren't so hot when I have this crazy schedule. I'm actually going to have a much more chill schedule coming up, but, you got to achieve things in life. We're basically 1 week away from my birthday, so I have a big birthday surprise for you guys coming up. Lots going on. Anyways, let's get to some trades. Oh, before I even get to some trades, it's also tax season, 1 week until April 15th, which is my birthday. And your taxes are due. So many people message me about taxes. You don't know what you're doing. You're not optimized. I'm not a financial planner. I'm not an accountant. I can't give, tax planning advice. Everyone's different. But the cool thing is we have partnered with this accounting company that really does great. And so I'm going to embed this video called How to Optimize Your Trading from Day One. This guy, Nick, is such an amazing guy, and his whole company of Prime is amazing. And I want you to really get optimized, okay? Like, it's stupid to me. Wait, I think I say this in this video? Hold on.
Technicals, plays, breaking news. But what a lot of people don't have set up properly is their accounts and their taxes. And this really can add up, especially later on in your career. So I have Nick here from Prime. How's it going?
Anyways, it's a whole 20-minute video. We explain just some basic tips for traders. But again, everyone is different. So I'm also going to link this. You could do a free consultation with Prime, which is pretty sick. And this is for my students only. You can book this. And I'm also giving a few bonuses too, just as a little reward for dedicated students. But you should get optimized, okay? It doesn't matter how much money you make in trading if you don't get to actually keep it, if you don't actually get to keep a bigger percentage. And trading is a very, nuanced business, you could say. So you need to really think about how can you fine tune your operation. If and when you do become a millionaire, you want to maximize the money that you get versus the money that you give the government or, whatever government, I have students all over. But you really need to understand that this is about organization and preparation. So it's pretty cool that, Prime is doing this. We've had a bunch of success with them and students. So I'll link this video so that you can learn more. You can understand why trading is a little different tax-wise. And I'll also link this if you want to do a free 1 hour consultation. It costs nothing, right? Like it's worth exploring at least. I'm not trying to sell you anything. Like this is specifically to help you. Remember, my job is to create millionaires from scratch. So I'm trying to give you tools and obviously education, but any little thing that I can do to create more millionaires. That's what drives me. That's what fulfills me. And frankly, that's what's grown my business. So this is something that too many people don't focus on. You're not optimized and it's just wasteful. And it's probably like one of the easiest things that you can do too. There's a lot of ways to make money and there's a lot of stuff that's hard to learn. This is easy. This is just, going through your own personal situation with an actual expert who's, involved in accounting, and they can try to optimize you. There's no harm in trying whatsoever. Let's get to trading. I'll post those links below. Nice, first few days of April for me, a little over 10 grand in profits, just buying a lot of these squeezes and these runners, not getting over aggressive, not worrying if I sell too soon, not worrying, about dip buying later on. A lot of people seem to misunderstand these short squeezes, and you're trying to buy these things after they've basically expired. You can kind of think of like, I don't know why I just came up with this analogy, but you can think of, short squeezes as milk. Milk is delicious when it's fresh and cold. It's not so delicious when it's warm and spoiled. And a lot of these short squeeze plays go warm and they get spoiled very quickly. And you just wouldn't drink warm, spoiled milk. So why are you trying to trade, expired short squeezes? I literally just came up with this right as I thought this. And as I'm making this video, I want like a nice glass of cold milk right now. But I don't have time. Okay. I have a crazy day. So many freaking plays. And some of them don't work out. VVPR, I will dip buy plays when they're off their highs, just if I think that they're going to, bounce pretty quickly. And I'll go into, what makes me dip buy, what makes me want to buy on the way up. Let's go over, I think Friday's trades are a good example. GCTS, I am trading pre-market, understand. Oh, actually, even before we go into GCTS, let me go into TCBP. This was Thursday's pre-market runner. And this one, it was an acquisition news play. Normally, I don't like acquisition news, but this is what has been hot. And understand, they're not the ones getting acquired. They're acquiring some other company. So you have to look and see what spikes stocks the most. And right now, it's this acquisition news kinds of plays. I literally don't even know how TCBP finished up. Do I have any room? There's so many stocks to cover. Ay, ay, ay. Let me add another one. Yeah, so this was actually just an initial spiker, but some people say, like, why am I buying pre-market? Because that's where it is, you're looking for where the volatility is. You're looking for where the opportunity is. This is all, the high right here is, 9:45 a.m. And then it's all downhill after that. So recognize what's working. This is it. TCBP, pre-market, big run. And you get the big spike. You get the big volume. This doesn't have a huge float, but again, it comes down. So some short sellers are like, Tim, why do you talk about longs? Like, these clearly just come down. They do come down more often than not, but you don't know exactly which ones are going to come down, how quickly they're going to come down. Sometimes these things turn into 2 or 3 day squeezes. I still think it's better risk reward to go long, and especially with a crazy schedule like I have this week and next week. I'm looking for, these fast moves. I'm not going to just sit in front of a computer or a laptop all day and wait for these fades. And some of these fades, they do not just keep fading. Sometimes they do come back. Not necessarily all the way to the pre-market highs or the morning highs, but there are spikes along the way. And for me, someone who likes to cut losses quickly, I'm not just going to sit there for hours through a fade. This was a nice and easy, morning spike, and I bought it way off its highs. I think it's also worth noting that I'm buying these squeezes, but very rarely am I buying them right at their highs. If you look at my recent video lessons, I'm buying these short squeezes 10, 20, 30, 40 cents, or 10, 20, 30, 40% sometimes, even off their pre-market highs. This one had already spiked quite nicely here to 275. I'm buying it way off its highs, and just thinking that it can come back. I didn't know that it was going to make new highs. I just knew that it could respike early on. I didn't know that it was going to fade later. I'm just counting on multiple spikes. That was TCBP on Thursday. And then GCTS, very similar, big pre-market spiker. I was actually pretty surprised that this one didn't do better. But again, my rules kept me safe. They had news with Aramco, which is one of the only multi-trillion-dollar companies in the world. And so this was like a seemingly big, meaningful contract, even though the price action into the close would suggest otherwise. But they had the news right here. Aramco and GCT, stocks to trade breaking news alerted it. This is another pre-market spiker. And, when the news came out, it was in the 6s. I'm buying it after it has already spiked quite a bit. I'm buying it in the 10s, but I thought that it could get back to the 12s. Very similar play to TCBP, where you get the big news spike, you get the big catalyst, and I'm buying it off the highs. And, this was, let me get rid of this so you can see. It had already hit the 12s right here before I bought, and it had come down here, and it looked like there was some support here in the 10s. So I'm buying it 20% off the highs, thinking that it can retest the highs. Remember, TCBP had the big spike and made new highs. GCTS did, I guess it hit new highs for like a second, but it couldn't really hold it. But I'm buying a pre-market spiker, 20% off its highs, selling into the bounce. It could have sold a little better because it did get back to the 12s, but I'm not really great at these higher price plays. Same exact pattern as TCBP. Look for pre-market runners. Don't buy the day high. Look for the 10, 20, 30% drop off the high. Sell into the respike. That's it. Sometimes simple patterns really can work well. It doesn't have to be some complex stuff. And then midday, again, like some people are confused because they say like, Tim, in previous video lessons in previous years, you say don't trade pre-market, you say don't trade midday, and that's all you're doing. I go where the market tells me, okay? In the past, it's been bad and dangerous to trade pre-market, and midday breakouts have uniformly failed. Not so in this market. And this is why I think that there's so many short sellers, because frankly, I've been successful as a teacher. A lot of people use these strategies, but the cool thing is short sellers and a lot of traders, they're not adaptable. So, they're watching DVDs, video lessons from years ago, and they're like, okay, this is an exact science. This is what, Tim and his students do. So this is what I'm going to do. And they don't keep up with their education. And, you're welcome to do whatever you want, but I think that you should always be learning. You should always be adapting. And this one, this was a nice big spiker, former supernova, nice catalyst here. It had already spiked up, okay? This is at 4 a.m. And part of the reason why it spikes at 4 a.m., some people are asking, Interactive Brokers starts trading at 4 a.m. and a lot of bigger brokers start trading at 4 a.m. E-Trade starts trading at 7 a.m. There's some brokers that don't even have like pre-market trading, and some people are like, what are you doing? Get a better broker, okay? I use E-Trade, I use Interactive Brokers. I'm still researching multiple other brokers because E-Trade frankly sucks now that they've been acquired by Morgan Stanley. But you should start to recognize that there are different times when you can trade. I don't like waking up at 4 a.m. Eastern, but some obsessed traders do. Anyways, XXII, already had the news. I was frankly just too busy near the market open, and I wasn't even really watching this thing. It was a little spiker, but the biggest spike happened here like midday. This is all around 11 a.m., 12 p.m., and it had a really nice afternoon spike actually to the 4s before fading back to the 3s. But you have to be willing to trade whenever the market tells you and whenever you can. We all have different personalities, different strengths, different weaknesses, different time zones. The market's offering up opportunities. It's up to you to capitalize, or it's up to you to screw up the opportunities. But I'm watching this play, and, it starts really running like midday. So I'm looking at this at like 12:20. It had already spiked here around 11:20, and I'm watching this key level of 3.5. And you can see here it kind of stuffs here at 12 o'clock, yet again at that key 3.5 level. It tried a few times to break out. It's like a triple top. And again, in the afternoon, it finally does, but that actually turned out to be a fake out. Welcome to breakouts, right? Sometimes you get fake outs, sometimes you get breakouts. But, I know 350 is a really tough level to break out, so I don't want to touch it at 350. I don't want to touch it at 3. But it comes down here, and this is what I really love. I want to show you this. When you are dip buying, I think it's good to know that, when you get this kind of triple top and it's fighting to break out, but it can't, you don't want to chase it. It comes down here to like 3-ish. And a lot of people are trying to dip buy it here because they're thinking that it can get back to 350. But I think it's really dangerous midday, especially. I don't want to trade at midday. Like I'm open to trading, but I'm not like, hey, I want to trade midday. I want to be in this chop fest. A lot of people were dip buying it in here in the 3 area, thinking that it could get back to 350. And then, I understand the thesis. Like, look, you buy it here at 3-ish. If it gets back to 350, even if it fails at 350, you make 50 cents. So this could be a good dip buy. For me, I'm not looking to trade. Remember, I always teach people, I'm a retired trader. I only want to come out of retirement when there's a play that's so good I would feel guilty missing it. I'm not looking to trade at odd hours, but I will trade if the market compels me. So I saw this here at 3-ish. I thought about dip buying it, but I was like, no, midday, it's choppy. Do I really want this? XXII, if you've been following my videos, DVDs, webinars, trades for years, this is a former runner, but you also know that it's very, very choppy. So stocks have characteristics. I don't want to trade a choppy stock at a frustrating time. Like, I just don't want frustration. So I did not dip buy it here. I watched it. Like, I knew that there was some support here. I understood the case to dip buy it here at 3-ish, but I don't want that choppiness. And this is where my thinking that I'm a retired trader really sets me up for more success. Because while everyone else is trying to dip buy here, and, again, if I was a newbie, I probably would dip buy because I can make a case that it's probably going to retest 350 again. Even if it fails, that's still 50 cents. If it breaks out, I mean, it could be $1 a share. I can see the thought process, but because I don't want to be frustrated, I hesitate. And hesitation, I think, on choppy stocks is very good. And that opens up the door to opportunity. And then I see it here in the 260s. And, you never know which support or resistance is going to hold. All you can, know is like, where is support and resistance? So there was some support here. It did show that, it could bounce at 285. And, you could have bought it, like if you timed it perfectly 285 and you flip it here at 3, like there was a little bounce, but not much. And then when you're looking for other support, you look at other key levels. And right here is a key level, right? 255-ish. This was the morning spike high. It goes down from 255 to 235. And then the breakout, the blast off here is 255. Guess what? It used 255 as support. So even if you miss this 11 a.m. breakout, which, I don't blame you at all. Like 11 a.m. breakouts are probably like one of the lowest odds times to break out. But when the lowest odds times to break out works, that means that there's a lot of short sellers. And, if you ever wonder, like some people like, how do you know if there's so many shorts? The short data is like a month behind. It's not, accurate. It's not up to date. You can judge based on the price action. When plays spike at weird hours that are not normally known for breakouts, those are shorts getting squeezed. So a simple rule of thumb, like 11:30 a.m. breakouts, most likely shorts getting squeezed. And this is a choppy stock. I know shorts hate it, but again, you got to look for where support is. So early dip buyers, over aggressive traders got caught in here. That opened up some panic. Now it's $1 a share off its highs, 360 to 260, and there's a lot of support potentially. I didn't know this was going to be the exact bottom, but I knew that there was support. And remember, I was thinking about dip buying it in here. So I'm catching it like 30 cents a share lower. That's a nice little deal. So I will come out of retirement if the market compels me. And on this one, the market compelled me. I said my goal is 5 to 10% bounce. I said solid drop now opens up opportunity. This is, some people say like, what solid drop? You really have to think about this ahead of time. And that's why I make these videos. Maybe you missed this one, maybe you caught it, but there will be others. A lot of dip buyers catch that first dip because they're so aggressive. They're looking to trade. They're looking to make money, and they very well could. But the better opportunities comes when the first group of over-aggressive buyers or over-aggressive short sellers panic and they puke up their shares and they give it to anybody who's, willing to be more patient at better prices. So this was actually an incredible entry. I sized up a little bit because I knew. Some people say, like, when do you size up? You size up when you get a really good entry, right? I wouldn't have taken this much size had I been buying it in the 295.3 area because, again, I could have made a case for a dip buying there, but you don't really want to be like the first one there because it opens the door to panic, which is what happened. So if you're not looking to trade, which I wasn't, now I get in a really ideal entry in here, $1 off the highs. Remember, just 30, 40 minutes ago, this thing was fighting 3 times at 350. So it's not like it just spiked big and then came straight back down. It was fighting. It showed me that it could really break out. Knowing that it broke out at around 11:30, that tells me that there's a lot of short sellers there. I have a really strong case for support at 250, 260. That's when I'm going to size up, even though it's midday. So some people, you don't know when to get aggressive, when not to get aggressive. I know that I'm talking about a bunch of different indicators here. Welcome to trading, okay? You need to think about these few different trading scenarios and indicators. That's when you can size up. And this is really a good example of my 25 years of experience where I'm using a lot of different knowledge based on the triple top, based on the short squeeze, based on the over aggressive dip buyers, based on the market, based on so many things, and it all came together with this trade. And this was, one of my biggest dollar gains, not necessarily my biggest profit gain, but this is beautiful. 2 trades, roughly 3K a day. You tell me if this helps you, if you see what I'm seeing. But I'm going for these morning spikes. I'm going for these midday breakouts. I could have bought the late day breakout here. I looked at it, but again, it's so choppy. I wasn't sure if it was going to break out. Even though it did break out here from 350 to basically 420, it was so choppy, and then it ultimately failed. So on extra choppy stocks, I'm not going to be aggressive. But if there's like these intraday panics, I will be. So that's what I'm looking for. More short squeezes this week. We'll see what stocks are in play. I'll make a watch list, but it doesn't even really matter. What matters is the big percent gainers. And then you knowing the support and resistance, knowing their characteristics. If you've studied them in the past, that's why I always say study hard. That's what it's all about. So preparation is key. Very nice trades on XXII and GCTS. And again, please also watch this other video that I'm going to embed, how to optimize your trading journey from day one. And I'll include a link for a free 1-hour consultation. Costs you nothing, no risk. The only risk is being unprepared. See you in chat.